All right, hey there, Sam with you here. It's Tuesday, December 4th, and as it's a Tuesday, we're looking at traditional assets. So by request, we poll the members as we do every morning. First up is a look at the Australian dollar. Now, this is a bit of a follow-up on it. We had talked about this, and there was a trade setting up. I think there still is a trade setting up here. It's pretty nice. So there's a pretty clear Elliott count in here. Now, this is a daily chart. So 1, 2, here's the big 3, sideways into the 4. We can finish it with an ending diagonal. Looks rather nice. So now, one thing I just point out here before I take it off here, because it might, just to clear up the chart. So I've got a modified shift pitchfork on this. Pardon me, I've got a shift pitchfork. Is it shift? Yeah, I think it is shift. Yeah, nope, but it is modified shift. Down and over, right? So we're down 50 and over 50. That's right. Okay, so I've got a modified shift, which is essentially a channel, right? So as I've shown this many times, so if you did this here, there's your channel, right? So it's just a channel, modified shift, just a channel. But because I've got that what I'm noticing here is that while this channel or modified shift isn't absolutely spot on to the tick, that we know from Andrew's trading principle number 3 that if the market doesn't pivot exactly on the median line, it will often return to it, make several swings around the median line, and then make a decision about where it's going, upper parallel, lower parallel. Well, what I notice here is that this median line, while it's, again, here's fairly good, right? Fairly good, pivots around. This lines up right where I'm trying to get into the short, because I'm trying to play for the idea, where I think the opportunity is that if this is the 4, we're just putting in the 1, 2 before we go 3, 4, and 5 to finish. Oops. I guess we can take that off. Okay, so if this is the 3 and I have this correctly identified as the 4, then we've got to finish in 5. So 5 potentially now could be way down here. So that's some good range here for an FX chart. And you think, oh, come on, man, is that realistic? Well, look where we've been. Look at this trade. Right, so again, this is, so I say this anytime I get the opportunity, because I just know this from so much experience with it. When you're trading FX, for trade decisions, I would tell you 4 hours and above. Some people tell you daily, weekly, that's it. Right? The market is so much cleaner, it's so much more clear. You lose all the noise. There's so much noise. It's so hypersensitive in Forex to the slightest little whiff of a potential interest rate change. It doesn't matter what the country is. It's always the same thing. So money flows where it's treated best. And all we're trading here is money. So the hypersensitivity of it is incredible, and it's also, the algorithms are tracking words, they're tracking anything social media. There's just a relentless attempt to use the technology to try to get an advantage as to where central bankers are moving rates. Right, that's what moves the FX market. We know this is, we've been doing a lot of training here in FX with the members here. This dwarfs every other market. It's 5 trillion traded every day. It's 100 times the size of the New York Stock Exchange. I mean, this is where the big dogs hunt. Okay, so when I see this, when I see that median line coming into play and I'm trying to track out a 1, 2, I pay attention to that. That's a potential, because it's coming in right here as we potentially are hitting the 50. So I know you can't see that. We're going to open this up in a second, but I just want to have this somewhere. If it's too much of a cluster on your chart and you can't make heads or tails of it, then do a quad on your screen and keep that somewhere so you don't lose track of the larger degree median lines. Right? They will continually come into play. Right, sometimes to the tick. I'll show you a couple here that are just outrageous. So in that it'll blow your mind how effective they are. So here, 1, 2, 3, 4. So there is simply no reason to assume that this won't complete. Now, so what's the alternate? That we have a truncated 5th here, that the 5 is in. That here was the 4, and we're going to end with a truncated 5th. It's certainly possible, right? It's possible. So if you look, so one thing that you would want to key off of here. So remember, when you're coming into the market, this sounds silly, but the first assumption always has to be that I don't care what you're doing. Your first assumption is that you're wrong, right? That'll keep you out of trouble. So if I'm wrong, well, what else could be happening? Well, the only other alternate here that I think is reasonable is that we've already finished, and that the 5 down here is already in. This is the 5, and we're done. So we get a truncated fifth. It's not an outrageous thought. It's just, it's not the norm. So it's lower percentage. So the higher percentage play is to make the assumption that all we've done is put in the 1 and we're putting in the 2. Right now, so one thing you got to pay attention to here is that there is a tendency to find parity between the length of the 1 and the 5 projected from the 4. So if I'm right here about this being the 4, we got 1, 2, 3, 4. Well, we do make the 618, which is, it's certainly, you can't discount it here, right? So this would be more common. The 618 in a truncation, that's where you might find it. You also look for it, excuse me, in it. Oh, there's several patterns where that can be common. Well, that gives you just enough pause to think, it could be. So if we zoom in on that and look at how close we are, well, we got through it. So we're through the 618, and you have a, boy, that's one thing that you got to deal with here is when you zoom in and out on, when you zoom in and out on TradingView, you'll have to reconfigure some of your stuff. It's not just TradingView. It's when you move if you move from a daily to an hourly, well, you're gonna have to retweak some of these. Well, so here it is. So here's what we're trying to get. So on the assumption here that this is not in yet, all right, which is, take note that now that's an assumption to the rationale behind this trade. If that assumption proves inaccurate, right, trade's a loser. So could this be done? Well, it could. Right, the length of time. See, the proportion is not actually crazy. So you look at the length of the time of this 1 relative to this as the 5. You know, it could be that we have a truncated fifth down here. So you could also think of it this way. Well, then I'd have an internal retracement because we haven't taken out this low. We know we had 5 going up. So we know this was here, 1, 2, 3, 4, 5. And now we got 5 coming down. So then you got to look at that and say, well, where would you be in the count? Wait, how come I have a 5 followed by a 5? Well, now you got to think about the bigger picture. So is this, one of my members sent me something the other day where I could get the full history of this. Can't remember what it was. But this would have to be some sort of an A, B, C to be finishing here. So this would have to be a corrective C here for this 5-wave structure to make sense. Well, what seems unlikely is that this would be a 1-wave, right? So where would that put the 3, right? So that seems less likely. So what are the alternates? So if this is finishing here, could this be an A wave? So you got to keep some perspective on, you know, you can get, so for example, if this were a 1, all right, so you said, okay, if that's a one wave coming down, 2 is going to be the 50, and then I'm going to get a third wave that'll be 1618. Well, you'd be right. You're not going to 0, right? That would put you down here. So you got to keep a little perspective on where you are, right, and what's realistic in terms of where the market could be going. Well, all right. So that said, this certainly could go beyond this low, right? It's certainly we've been there before. So that would be very bearish of the Aussie dollar relative to the US dollar. But right now, unless this is done and we just have a truncation and this is just going to be maybe an A wave, it's hard to argue with this 5. So the higher probability is that we're going to finish in 5. So even here, this would be the parity for the 5th relative to the 1st, more common target than the 618. But this, you know, it's possible, could be done because we finish with a nice 5. So on the assumption here that, all right, so I guess I've talked enough there. So if this is a 1-2, well, then we're trying to finish an ABC in here. So let's go down here some. If I go to the 4 hour, it won't break it up so much. And we're going to have to go, let's try 2. And we can get a little more clarity here. Okay, so there we go. So if indeed all we're doing is putting in the 2 wave, then we can look at it and break it down. Okay, so there's some good things that are very obvious here that we can use to our advantage. Okay, so if this is done here and we're working into an ABC, so here's the assumption. A is complete. So we've got very clean series of impulses, right? So this we get 1, 2, very clear impulse here to give us the third. Very clear, right? 1, 2, 3, 4, 5. It's just textbook Elliott. 1, 2, 3 is in, down for the 4. Now a little deeper for the 4, but we don't threaten the 1. We get through the 50, right? Is it this structure that comes in? Could be. Could be. You just got a little structure here. Here's the 50. Now, still not to the target. Is that a front run on the target? Well, hard to say. It doesn't quite play. So look here. So if this is done, so if this is a completed A wave, which is hard to argue with that, right? The subdivision, even here in the fifth of the A wave, just beautiful impulse to finish. So reasonable, something completed here in 5. Well, of course, if something completes in 5, first thing we do is draw up the 50. So what do we get here? Well, we don't make the 50. We don't quite make it. Here's 38. 50 doesn't get it. So if you were there, you got left hanging if you're trying to buy the 50. It doesn't have to go to the 50. It's just that's the higher probability. That's where we see it more commonly. Up we go, and we get a clean 5. So what is that? Could that be the C? Well, I guess it could be. But I wouldn't assume so. So let's think about typical relationships here, common relationships here. Length of the A projected from the B would be 100%. Well, here we've got that structure up here. We've got a pivot that we talked about that. I won't be able to show it to you. It's a structural pivot from an earlier swing. So we're trying to look up here. Well, here's the zone that we're trying to get to. Here's the 50 to the, well, we'll do it this way. Here's the 50 to the 618. So how are we going to get there? Well, if that's the C, then this thing is done. I think what's more likely is that all we've done is put in the 1 wave, and we're in the process of putting in the 2 to get the 3, 4, and 5 to complete the C wave here of the 2 wave. All right, so this would be actually this. Actually, I've got a straggler up here. That's what I want. Okay. All right, that's why it's a good idea to get the degrees aligned and change color, because otherwise you're like, well, wait a minute, where's that 5? So 1, 2, 3, 4, 5 gives me the A wave. I guess so. I ought to do when I'm advising. Let's change that so we can spot it. Okay, so there's the A wave. A, B, C for the B, albeit it's skinny, doesn't make the 50, but we rip off of that with an impulse. So either A, B, C is done and we're on our way down to finish the 5, that's the hypothesis, or all we're doing is just putting in the 1, 2. So we're going to finish this as a 1, 2, 3, 4, 5. Gets me right to where I want to look for that entry here for the 2 to trade into the bigger move lower, if we get it. Now, we don't know, but if you look back here now, and try and put the whole thing together, that's a reasonable roadmap to get there. If we get there, that's the sell zone. So regardless of the Elliott count, you could just say, so maybe you're like, oh, this Elliott Wave is bullshit. Okay, fine, right? I tell my members this. You don't have to use it. If you don't find value there, you're like, God damn, man, you're changing the wave count all the time. What's the story? Well, it's not so much about Elliott being... It's certainly, compared to anything else we have, it's the best predicting approach to the market. But it's the ability to organize and structure it. That's the real value. Because otherwise, what are you doing? Right? How are you organizing it? It gives you a series of rules and these probabilities. And yes, they're tendencies. So nothing's perfect in the market. But it gives you the ability to organize this and have a definitive spot where you know that whatever your analysis led you into concluding that this is an area for a trade, it's a way to organize that and then invalidate it, where you know for sure the market proves you wrong, not just the fact that you took a stop or a moving average line crossed over or a trend line broke. I've got patterns here that I know repeat in the market every day, in some way, on some level, every day, never misses. Right? It's always there. And then I have an algo pattern that is always there. You can go from monthly to the 1 minute to the 120 tick. You will always find that algo there, right? Always. It's always there. It's just a matter of hunting for it. Where is it? Right? I can probably see one right here. Right? Oh, that one broke. Well, so... Yeah, it's not a bad example. So here you get very small break here, but look what we get, right? So these are, It's a little bit, it's not uncommon in FX that you have a little more volatility around these pivots. Stop running most likely here. So, and then we get to target to the tick. So for whatever reason, we're always doing our best to guess what they did. But that tells me that that algorithm stayed with it. So maybe they backed the stop. You don't know. You don't know. We're never going to know. We don't know who's behind the algorithm. We don't know who the players are. We just know it leaves a footprint. That's all we get. All right, so you got to go, wonder why. Right? Is it just a little stop running? Have they moved from the 65 to the 67? Hard to know, right? So, I mean, people are getting more and more aware of this, right? So you're seeing, particularly in FX, this could have been a little stop hunting, right? You have to give cushion in FX. That's one of the bitches of it. So I guarantee somebody had a stop right there. Got stopped, and then they, when does that happen? Well, often it'll do that in the middle of the night. You'll come in, check your stuff in the morning, and you're like, mother. Yeah, but so I digress. So let's get back to the point here. So if this is 1 and this is the ABC to give us the 2, well, shit, man, there's no guarantees that that's where it's going to turn. That's just a probable zone for it. And if this analysis ends up being right, then there's a trade here. There is absolutely, there's no reason not to take that trade. Right? Unless you know something I don't know. Well, so then you go, oh, shit, man, what's coming up? Well, it's a question of when do we get here? Do I have, I'm going to get more here. So you got to check the report schedule. If you don't have something that's on your screen to tell you, well, we got to look here. Anything big happening with the Aussie dollar? Well, here's a few biggies. Retail sales, you're always looking for the red. Red relative to the Aussie dollar. A couple of reds here, right? Red retail sales numbers, right? Thus the hypersensitivity to what's the next, what are they anticipating that the central bank's going to do to the Australian dollar? That's why it's so hypersensitive. Look at all this on the CAD coming on Friday. The market is incredibly responsive to these reports, so you can't trade blindly to them. So I just point that out here for members know this here, but if you're watching on YouTube, you cannot forget thinking, oh shit, okay, that looks good. I'm going to take that trade without checking over here going, oh shit, man, tomorrow morning I've got the Aussie dollar's retail sales number. Do I want that trade? Do I want that trade going into that, knowing that there's going to be volatility around it? Do I want that trade going into that report? Whoops, get over here. Going into that report, do I want that trade? Maybe I want to let the report come out. Maybe it happened to be, if you're in the States, that'll likely happen while you're asleep. Do I want to be in that trade while I'm sleeping, while I'm going into the entry? So one of the things you got to deal with if you're trading in FX, you don't want to trade into or around reports. You want to let the report happen. What's the response? Okay, so let's say it goes up here and you get this reaction and it starts to head down. And you're like, God damn it, man, I missed the trade. Well, there will be, if that's the C, then all that is the 1. So there will be an opportunity. If it goes deep, oh, God damn, I stalked the thing. It was perfect. I had the whole thing set up. I was there. I checked the reports. I saw that it might get a reaction. You gotta, it'll come, right? That don't give in to the, oh shit, I missed it. I got to chase it. I don't care how far that goes. There will, because the people who caught it, right, the temptation will be too much. They will take it, right? So those will be, if they sold it here, those are buy orders. That gives you the 2, right? So there will be opportunity. So rather than just be frustrated, oh man, I thought I had it, or you took it and you got stopped out and then it went down. Next trade, get used to it. 1, 2, right? There's the next opportunity. Miss that, we got a chance at the 4 to the 5. Right, and if the whole thing ends up being wrong, well, how are we going to know? Well, if we don't get 3 here, if we don't finish here, and this starts to go, get this off of here, how are we going to know? Well, does the complexion of the structure change? Because if this starts to go here and we get a bigger kick, well, first we're breaking the 65. That's a tell. If that kicks and then we come down, you're thinking, oh, there's the 1, there's the 2. Well, if that goes again, now it was a 3, 4, 5. Right? So there's no way around that. There's no way around that risk. How do I know for sure it's an ABC and not a 1, 2, 3? Well, you don't. You don't. And you won't. All you can do is take the trade and manage the risk. Well, if I'm wrong, where am I out? Right? So if you take that trade, so that's why I always encourage you to do it this way. Let the first move happen. So, okay, confirms that I may be on the right track here, that's the good pivot for the C. If it comes down here and you miss it, or you're like, I'm not sure, or let's say it was Thursday and a report was coming out Friday, sure, you could miss it. I understand that's frustrating, especially if you've been tracking, waiting. The alarm finally goes off. You get the little alert, oh, in goes my trade. Well, the reason I prefer this is because I'm trying to get that. But, that thing bugs me. But I'm trying to get this, but so where's the stop? Stop's on the other side of the pivot, because the assumption is the pivot's in. So if it comes up here and it takes you out, well, right, thank you. Stop's doing its job, right? Keeping from that. Because that could easily go 3, 4, 5 upper parallel. Nothing says that can't happen. So thanks for doing your job, stop. Right? That's how you got to look at it. Sure, you're frustrated, but you don't know. You aren't gonna know until this happens. Then you're like, okay, I got it. Right? So now what do you do with your stop? Well, now you move your stop right here, because the assumption is that's 1, 2, or AB, or whatever the case may be. I like to take the pivot here. I like this one because I know where I'm wrong. I know where I'm invalidated. That's the point here. So you aren't going to know. Right now, the odds are, based on the analysis, that we still have more downside. Right? Knowing we could be wrong, because the 5 could be in. So if it's a truncated 5th, well, here's the 3 truncated 5, because I can finish in 5. So it could be 4, 5, could be wrong. Could be wrong, right? You can always be wrong. First assumption is, okay, let's assume I'm wrong. So that should always be in the back of your mind. You're setting up a trade and you're like, God, I got it. You don't finish that until you say, well, let's assume I'm wrong. What else could it be? Where do I know that I'm wrong? It's not necessarily where your stop is. Now, in this case, yes, right, I'm wrong. If I think that's 1, 2, and this gets taken out, cannot be a 2. Well, could be a B, could be an expanded flat. Right? I wish I could tell you it was easier, right? You don't get certainty in the market. You don't get it. So you can't look for it. It's just like perfection in trading. It's unattainable. So don't strive for it. You're never going to reach it. There is no perfection. As I've said many times, best traders I know, they would all, the guys who taught me, and you could just ask around as you meet traders. Best traders in the world will tell you that 80% of their profits come from 20% of their trades. It's just the reality of it. Right? It's the one that you get like this. If I can get this to reassemble, can I? Trying to get that to reset. It's the big ones. Trading view is being a little squirrely on me. It's this trade or this trade. So let's see, you're up here and you're thinking 1, 2. It's getting that and then keeping your hands away from your mouse. It's getting, if you didn't get this 2, you had another shot up here. Look at this. Look how nicely this set up here, just this wall of resistance. Boom, boom, boom. Once it turns, then hands off. That's how money is made in FX. It's not day trading the 120 tick in the 6E. Well, shit, man, I'm sure there's people doing it successfully. I would advise against that, right? So the shorter the time frame, the more directly you're competing against the machines. Something like this, where you can have time, where you don't have to be to the tick perfect, you can get in sync with that longer trend. That's what you're after in FX. Right? So get back to that daily. Always start on the daily. Right? So I have members do this. They come in and say they'll send me a chart. Say, I think I've got something here. I think it's just such and such. What do you think? Where's the next trade? Do you think I've got this right? My first question is, particularly if it's FX, is where are we on the daily? Right? That's the only thing that's going to help you try to identify what's most likely happening. What's happening on the larger degree? What's the last algo pull or reaction that shows you who's in control, bulls or bears? Right? Did a 618 hold? Yeah. Right. Who held it, bulls or bears? Who's in control? Who's in control here? Looking at this, you see this? So we've had this. So you could make the case that it's pretty hard to tell. So right now, let's get this one off. So here, this 50 has just missed going to target. So we can look at the larger degree knowing that potentially this 50. So we're trying to get from this 50, so that's a big range, from this 50 to the larger degree 50. So short term, right, sitting here on hourly, bulls in control. Longer term, bears in control, right? Until that 65 breaks, because that's the big 65. That's all you get, guys. Right? There's no certainty here. If you're looking for it, you're not gonna find it. I just tell you, because I've already looked. All right, guys. With that, what is it I'm supposed to say? I don't think I have anything other than I've got one more coming here. So I hope you got something out of that. I kind of rambled there at the end, but as always, if you want to learn more, give us a follow over on Twitter. Likely, if you're watching this, you're following on YouTube. We appreciate that. And you can always reach out to us if you're interested in our membership and what we're doing in there. We're always happy to engage with you, whether you're writing us on Twitter or an email. Happy to tell you more about it. All right, with that, I'll wrap there, and I've got, looks like one more to do today. Okay, see you later.